Former Richmond Fed President Al Broadus is here. Also, former Minneapolis Fed President Gary Stern, and our guest host this hour is Wells Fargo Chairman and CEO John Stumpf. And gentlemen, Steve Leibsohn asked about this. It's the question that a lot of people have been wondering is how devastating is it going to be to watch the Fed make this transition? And Al, I know you already mentioned a little bit that you think there's going to be some volatility around this, but do you think that that is going to be a devastating amount of volatility?
I don't think it has to be devastating, and I really don't think it has to be ugly. Inevitably, the first step, which I think you could argue occurred yesterday, was going to get a reaction. But to me, and you may have continued volatility throughout this whole process to some extent, but it doesn't have to be ugly. I think the key is for the Fed to keep the public as fully informed as it can of what it's thinking, of what its own uncertainties are, and where it thinks it's going to go under certain circumstances. And I think what the chairman said in the press conference yesterday was a step in that direction and a step in the right direction. It's not going to eliminate all volatility, but it can certainly help to moderate it and keep it contained.
Yeah, I think Al's exactly right on that. I mean, this had to happen. We want to get back to normal.
Right.
And it's not been normal, and the Fed's been very accommodative. And, you know, think of it. We're 4 or 5 years into this.
I know.
When is this going to start to happen?
It sounds like you think we've gone a little bit too long.
Well,
what if you pulled back earlier?
You know, I'm not a big fan of this much accommodation this late in the game because I think the benefits from it.
I mean, the effectiveness is not there.
It's not there, and also helps mask the things that should be happening on the fiscal side.
Okay.
So, but this is going to happen, and one of the impacts of QE, it reduces volatility. You expect to see some volatility. So people are going to overreact on the upside and the downside.
Yeah.
And so,
Jerry, we said it. We all know it's in the future. It's looming, and knowing something's coming is like knowing you're going to get a shot at the doctor. We're all waiting for it. It'd be nice to get it out of the way, wouldn't it?
Well, and you would think people would position for that, as you said.
You would, but some idiots haven't, right?
Well, I think the Fed will work very hard to try to contain volatility. They won't succeed entirely for one very obvious reason. The incoming information on the economy and global developments and so forth won't be entirely consistent with what the chairman said yesterday. So there'll be some positive and negative surprises along the way. Market participants will react. They'll try to guess how does that affect the Fed, et cetera, et cetera. That's the environment we're in, and that's the environment we've been in for quite some time, really. So,
John, let me ask you one more question. Yesterday I was listening to Bill Gross. After the statement had come out, but before the chairman had actually moved and started his press conference, he was talking about where he thinks rates will be for the 10-year at the end of the year. I think he thinks they'll be lower than where they are now, closer to 2%. What do you think?
well, I don't know that, I don't know I have a better crystal ball than he does, but I do agree with this. This won't be the low water mark today, where we are at the 10-year at, whatever. I haven't looked this.
I think it's 2.4.
But
Yeah.
2.423. We could revisit the low twos again. I mean, and we could revisit higher. I think we're going to see again more volatility on the upside and downside because Gary's right. All the economic information we're going to get between now and whatever we're done is not going to be the same. And it's going to overreact on both sides.
You alluded to this idea that the way the Fed has dealt with all this has masked some of the problems in Washington and allowed people to not necessarily take some hard decisions. So the question is kind of sort of the second, third day story is, what is the implication, do you think, for Washington writ large, meaning when it comes to actual fiscal policy?
Well, they have a lot of things to do. I mean, I think working on immigration is an important thing. I'm hopeful.
I guess the question is, does this change that equation at all?
Well, I think it could. I think it could. Now more of the focus will be on Washington. I mean, we need a deal. You just heard John Chambers talk about taxes.
Right.
I mean, tax policy in the U.S. at minimum should be neutral to job growth here.
Right.
At best, it ought to be positive for job growth here. It is not today. We've had a lot of changes, a lot of regulatory things going on. So we have a lot of things that we can, maybe now focus on, work together, cross the aisle, and that will be important.
Who's going to be the next person at the Fed?
Next chair?
Yes.
Well, I think there are a number of capable candidates, and I think one of the criteria besides who is up to the job is who can get confirmed. And among the people that can get confirmed, in my opinion, are Janet Yellen, Roger Ferguson, Don Cohn, probably Alan Blinder.
Alan Blinder.
You asked me.
All right, let me ask Al Broadus. I'd rather have, I didn't hear either Tim Geithner in that list or Larry Summers.
Well, I think Larry Summers, my own political analysis, and that's not my strongest suit, but that Larry would have trouble getting confirmed. Tim, I'm sort of guessing, would like to retire from public policy.
Yeah, all right, let me get Al Broadus. I'd rather have Alan Seuss than Alan Blinder. Who do you think, Al? I'd have you.
Well, I think Gary is right that who can't be confirmed is going to be a big consideration. I think Janet certainly is one of those people, like Roger Ferguson could be. I think Janet is generally at least for the moment seen as the front runner. She's so I think the betting is in that direction. It's understandable.
Gentlemen, thanks.